our economic headwinds, reducing our opportunities for rate cuts in 2025. Let's talk about it on Today in Mortgages. Hey, what's up, Dreammakers? Welcome back to the show. We're talking about what's real, what's hype, and what you should actually be paying attention to out there in the world of mortgage and real estate news. It's Today in Mortgage. Rich, we're coming up on the end of the year, and one of the big events that we're paying attention to is a potential Fed rate cut tomorrow. So let's start there before we get into our topic today. What are we looking at tomorrow?
Yeah, I mean, it's 95% sure we're going to see a 25 basis points reduction in the Fed fund rate. But that's already baked in. There won't be any big reactions to that because that is widely expected.
Yeah, and I think what we will be paying attention to is the comments that go along with that in the meeting tomorrow. And what we're talking about today is an article that we've seen several of these, but we picked up one from Yahoo Finance. It says the Fed could be on the verge of ripping up its rate script for 2025. So, Rich, before we get into the points of this article, what was that script for 2025 that the Fed and Chairman Jerome Powell had been kind of projecting out?
Well, it was all the dot plots on, when they anticipate the reduction of that Fed fund rate at any particular time of the year. And that's kind of being skewed a little bit because CPI is stubborn. It's just not budging as much as they needed to. What we just recently saw, a 2.7% increase. While it's closer to the 2% mark, it's just not quite there. It hasn't really moved much.
Yeah, so if you were not paying attention, Rich, that CPI report came out when, and tell us why it wasn't, did it go up from the previous month? Where were we at on that?
Yeah, well, it's 2.7% increase from November of last year. So year over year, you're seeing that. That's the big number. So we're still seeing inflation at 2.7% as opposed to the 2% mark that they want to see it at.
Yeah, absolutely. And so rate cut coming tomorrow, and we'll see comments. And so we're talking about that dot plot, Rich. There is a lot of conflicting kind of commentary inside this article. We've seen other articles. There's one from the Wall Street Journal out yesterday. What are we seeing here, and kind of what is the consensus with your ear on the ground?
It's hard to tell because really everybody is just guesstimating. And it's all going to depend on all these economic reports that come out and labor reports, especially the labor report, because they're not really seeing the weakness that they thought they were going to see. So that just tells you things are still pretty hot. But again, some of the Fed presidents do see the weakness. It's split down the middle. It's likely that we're only going to see a couple of cuts next year, Michael.
Yeah, Rich. And what we saw, the comments last time from Chairman Powell was that we can basically afford to be a little bit more cautious is kind of what he said. And so, Rich, we talk about rates here a lot. Obviously, rates directly affect all of our business. But one thing that we've learned over the past several years, and I think we continue to see, is that we have to look beyond rates, right? And so if we're crossing our fingers, holding our breaths for rate cuts in 25 and putting all our marbles in that jar, are we doing it wrong, Rich? What should we be doing?
No, I mean, listen, homes have to be bought and sold, and they will continue to do so regardless of where rates are. Maybe at not, the levels that we would like to see them at, but they're still happening. So people have to move. We've addressed this in previous shows, Michael, for family and work reasons. It just has to happen. It's going to happen. The affordability piece, well, for one, if you're a buyer and you want to get into the market, obviously, we've been saying over and over, this is the time to be in. You got to get in the market. I mean, what we just saw Redfin announce 4 to 10% increase in home prices next year. So that's already, imagine, let's say you get 5% increase. That's 5% appreciation on your investment you make today. So you got to get out there and do that. If you can afford and can qualify based on interest rates today, you should do it because there's always the refinance opportunity. Rates are going to come down. Maybe it's not going to happen in 12 months, but maybe it's going to happen in 18 months. Just if you can afford to get into the market now and explore homeownership for the next 12 to 18 months, you'll be in a good place.
Good word, Rich. And on the loan officer side, on the real estate side, continuing to wait and see and wait on that, kind of hand of God to come down and give us great rates and make the business incredible again. That's the wrong attitude to take, obviously. And so that's what we're encouraging here at the network, is getting out and just training our people on how to, accommodate this economic cycle and how to succeed in that. So Rich, high level, what are some of the just things that we're talking about here at the network?
Well, we want our originators to be very educated in the products that are available to them and their clients. That's the important piece. There's a lot of down payment assistance options. There's a lot of rate buy down options. There are builders that are selling interest rates with their homes that are pretty low. You just got to talk to your LO to find out where those are at. But you just need to be a little bit smarter than most today, because the interest rates are the interest rates for everybody. Maybe one company is 25 basis points lower than another. And, it's just everyone's pretty much working with the same deck of cards here. It's how do you use them? And that's where, educating on different products, different pricing available, and just tons of different options for the borrower that are still available today. But they're not available if you never talk about them. That's the key. You need to educate your referral partners, you need to educate your clients, your first-time home buyers, on what is available to them today. That could be the difference from them waiting it out another year or deciding to pull the trigger on a new home purchase.
Rich, that's absolutely true. And one of the exciting things that's happening here is that we're in the middle of planning for our President's Club that's going to be happening at the beginning of 2025 for all of our top producers. And our numbers this year for our top people are much better than they were last year, despite some really tough economic situations. And so here at the network, we try to make our best better, and we're all about making you better. And so if you're interested in learning more about how you can be a part of the best network in mortgages, click the Grow link below. We'll get you all that information and more. So Rich, the Fed meeting is tomorrow. Final thoughts on anything rate related, or just what's on your mind, Rich?
Well, we're going to see the cut. We're going to see the cut tomorrow, and it's just going to be blah. No big changes are going to happen because it's widely expected. The big thing that you mentioned about all of our top producers in President's Club and how they have grown their business exponentially, that's what happens in these times. The top 20% have the mindset that they can capture more ground. The bottom 80% have the mindset of, I just need to wait for rates to come down. Oh, all of my referral partners are just slow. That's the mindset. That's what they would call a loser mindset. The winner mindset always comes out of these lulls in business cycles. They always come out bigger. It's because of their mindset. Go out and find someone that needs to work with someone bright and someone not just waiting for interest rates. That's me. That's the mindset that they have to grow. And again, we're just seeing what we always see. The top 20% always get larger in these business cycle lulls.
Good word, Rich. And that's what we're about here, is making our best better, focusing on the quality of the people that we're building inside of our company and not necessarily just quantity. So thanks, Rich, for that word. Thanks, everyone out there, for watching, listening, wherever you are. We appreciate you. We'll see you next time on Today in Mortgages. Today in Mortgages is produced by Network Funding LP, which is an equal housing lender, NMLS 2297. The content of this program is meant to be a commentary on mortgage and real estate news, and any discussion of rates and or products should not be taken as an individual mortgage or home buying advice or pricing estimates. And any commentary on this show should not be considered a promise to make a loan. All applicants for a loan must qualify, and you should consult a professional regarding your individual loan scenarios for your financial situation. Visit our website at nflp.com/licenses for all state licensing and other legal information.